All right, here we are. Great. Nick, thank you for inviting me to host this panel with you and Obi. And Obi, nice to meet you here. Nice to have a chat with you here. Nick, because this is your event, before we kick off into what the panel is about, where we're going to discuss the future of Bitcoin, a subject which I find super interesting. Do you want to just do a little intro, welcome everyone to the conference and tell them what they should expect?
Yep, that sounds great. So thanks, everybody. Welcome to Keyfest. This is the second year that we've done Keyfest. Really happy to have you here. And the idea with Keyfest is for it to be a really just relaxed, chill conference. It's not going to take all of your time with 50 sessions a day for a whole week straight. You know, we've got a couple of sessions every day from today through Friday, and they're meant to be really focused educational sessions about Bitcoin or your security or your personal privacy. And so that's really what we're trying to do. Just make this a fun educational place for people to come, hang out, talk about Bitcoin. So welcome to Keyfest, and thank you everybody for joining.
And Nick is the CEO of Casa, if you don't know that.
I am.
He is. A couple of years now. Was it 2 years now? 3 years now? I can't even remember.
It's a couple of years, end of 2019.
It's gone so quick. Okay, Obi, do you want to just introduce yourself to everyone so they know who you are?
Hey, and thanks, Nick, for having me here today.
Thank you for coming.
So, up until a month ago, I was the CEO. I'm still technically the co-founder of Coinfloor, which was the longest-running Bitcoin exchange in the world. In fact, actually, and more recently, I have been the honor of being chosen to be one of the board members for BTrust, which is an organization looking to incubate and help promote Bitcoin development and promote the Bitcoin development ecosystem around the world, but with a focus on parts of the world where we think there are untapped opportunities.
Amazing stuff. I still can't believe we've never actually properly had a sit down yet, Obi.
No, we've talked a few times, but never. It's happened today.
Well, at least the English are finally in control of a conversation for once, because it's usually all the Americans and one of us in there. But Nick, look, thanks for having us both in to do this. The future of Bitcoin is always a great subject. I know it's broad, but listen, before we get into that, let's talk a little bit about 2021. It was a massive year. So much happened. I did a show recently to talk about this on my podcast, just like trying to get our head around the number of things that happened. There were so many things that happened in 2021, like if on alone would have been like a headline in 2017, but just became the norm. Talk to me about 2021 for you, Nick. How was it, man?
I mean, it was a crazy year for me, for Bitcoin, for Casa. Casa grew a ton, which was super exciting, but that was really because the Bitcoin industry as a whole was growing so much. I mean, the biggest story for me that I just continue to be mind blown by was El Salvador making Bitcoin legal tender. And I know everybody talks about this all the time, and that's because I think it's such a big deal. We've been talking about nation state country level adoption for years. It feels like, 5+ years, right? And then it happened for me way earlier than I thought it would. Maybe I'm not bullish enough on Bitcoin or something, but it happened way earlier than I thought it would. And it just seemed like a really big demarcation line where, okay, now this is that first domino that falls and everything is going to be different from here. And so it's a big signal of what's coming, I think. But that was, looking at 2021, that was by far the biggest event that stood out to me, more than like the Bitcoin price going up so much, more than what MicroStrategy was doing. The El Salvador stuff was just crazy.
What about you, Obi? Do you agree, or do you think there's a big...
Yeah, I mean, like many Bitcoiners, I flew out to El Salvador. My main objectives was to not trust, verify. I wanted to see. I spent a lot of time talking to people on the ground, and it was a momentous occasion. I wrote about it. It was incredible. But I think I'm going to be a bit contrarian here, because I think an even bigger thing for me last year was the grassroots adoption of Bitcoin, but in Nigeria, the other side of the world. So you have a different country there where a government did everything possible to stop Bitcoin, but we ended up at the end of the year with a level of adoption by some accounts as high as 30%. Many companies, as a matter of course, are holding some of their Bitcoin in some of their treasuries in Bitcoin in Nigeria now as a hedge against the extremes of government regulation. And it is understood that this is an important and valuable thing. In Nigeria, it's not Elon Musk, but people like Jack Dorsey who are the heroes because of their backing things like the End SARS campaign. And we see fundamentally, and this is the big sort of revelation for me, that we are seeing from in 2021, we started to see that all of the biggest news or much of the biggest news for Bitcoin won't be coming from the traditional quarters for technology, i.e. the US and the West and Western Europe, but it'll be coming from, in the case of El Salvador, South Latin America, it'll be coming from Southern Europe and India, it will be coming from Africa. And that's something that we're going to all take time to get our heads around. But this was the year where the biggest stories weren't just from the US and Western Europe.
Why was that happening in Nigeria? Why was that such a? It's obviously you obviously have a reason to care about it and you have a reason to look at it and you took an interest in it. But like, why? Why is it such fertile ground for Bitcoin in Nigeria?
It's fertile ground because they have the most need for something like Bitcoin. For years, when I was, so I'm in my mid 40s now, to age myself, but when I was young, in my as a teenager, £1 was about 1.5 naira. Now it's 400 or 500 naira in a period of 30 years. So we've lived in an environment of inflation and high inflation for decades. It's the norm. So a currency that can protect you from inflation is an obvious boon to somewhere like Nigeria. And Nigeria is one of the best performing economies in Africa. So this is typical, those levels of inflation. That's not hyperinflation, but that's definitely elevated levels, double-digit levels of inflation. There are also attempts by the government. What actually catapulted it last year were attempts by the government to stop protests. There's something called the End SARS process, and that's not the disease SARS, but it was the Special Anti-Robbery Squad, which were this section of the police in Nigeria who were supposed to try and stop cars on the roads and survey traffic to make sure people didn't get robbed, etc. But there were accusations and claims that they were actually abusing their power. And it got to the point where this sort of young Nigerian group of young Nigerian entrepreneurs and technologists and coders were tired, and they went onto social media, they went onto the streets, and they started to protest about this and say, look, we have to end this group. It's not actually solving the problem it's supposed to solve, and it's actually just hurting. The government, then certain groups actually organized and started to get a lot of support from the diaspora, and then the government shut their banking down. And in desperation, they looked to Bitcoin, and they got a lot of success from that. It started to really accelerate when I believe Jack Dorsey tweeted that you should use Bitcoin to support these schemes. And they raised what in Nigerian terms was a lot of money. And that's when people started to realize, wait a minute, this thing can't be stopped. And that's when the government started to feel fear.
That's pretty crazy. Oh, Peter, you're on mute. But yeah. That's it's a lot of what Alex Gladstein talks about, seeing in other areas of the world too, right? It's people who are dissidents turning to Bitcoin because it's unstoppable money. And they used to have these huge problems with the government going and shutting down their bank accounts when they don't like what they're doing. And suddenly that is not possible anymore with Bitcoin, which is just amazing.
Yeah. What's really funny was when I started Coinfloor, my first piece of paper, my first notepad was about how we can use Bitcoin in Nigeria, because it was so obvious. But no matter how much I tried, it was impossible to get people within the UK to sort of see that this was a big opportunity. And even more so, it was impossible in Nigeria to get people to care about Bitcoin. They just didn't understand. They didn't get it. Fast forward 4 or 5 years, about 3 years ago, and the view of Bitcoin in Nigeria was at all-time lows, much lower than it ever been here in the West. And this was because their experience of Bitcoin was wholly negative, because various Ponzi schemes and scams used the Bitcoin name and brand in vain. So you had MMM Global, you had BitConnect, you had OneCoin, and their major stomping grounds was the global South. So when we talked about people about Bitcoin, either they or someone they knew had basically been scammed, and they considered it to relate to the same thing. So I thought this has really not got much chance of seeing adoption. And then the government bans Bitcoin and adoption skyrockets. So my view, we'll come to that later, but my contrarian view is getting governments are the best educators of Bitcoin by far, by inflating money and regulating it, trying to regulate it out of existence. Wherever those two things have happened, adoption rates go up massively.
Well, Harry Suddock also says everything is good for Bitcoin.
Yeah.
So you could have the top-down approach of El Salvador making Bitcoin legal tender, and that's good for Bitcoin. And you can have Nigeria government do the opposite and banning it, and that's good for Bitcoin. Everything is good for Bitcoin. But it's an interesting trend, to talk about Obi and Nick to talk about growth rates of Bitcoin within more challenging economic environments, more maybe third world countries. And the reason it's interesting, I think we talked about this, Nick, when I saw you recently, because we're here also as guests of Casa to talk about key management as one of those things. But the key management solution I know I have in place would not work for me if I was living in El Salvador. I was maybe a little bit poorer. I maybe live in maybe a shack or a house that doesn't have high levels of security. I don't have access to go to certain places to hide my keys. It's a different scenario, key management, depending on your geography. How much does Casa think about that?
Yeah, so we're starting to think about it more and more, right? Especially with what happened in El Salvador, what is going on in places like Nigeria. There's a lot of people that have mobile phones, right? But getting hardware wallets into the country is actually, one, kind of difficult from a logistics and customs and shipping perspective. But then two, a lot of people just don't own enough Bitcoin to be able to spend 50, 100, 200 bucks on a hardware wallet, and then let alone something like a Casa subscription, right? And so the way that we look at this is we firmly believe that private key management and self-custody and making that really simple and secure is one of the biggest barriers to global adoption. In my mind, the two are secure custody and then smooth global on-ramps, which is obviously where Obi comes from. And so this is something that we've been thinking about a lot lately, and we'll be taking some steps towards over this year of really thinking about how do we adjust what we are offering for these different types of communities to help as many people as possible be able to access Bitcoin, be able to hold their own keys.
Yeah, Obi, I mean, this, having been the CEO of Coinfloor, but most of the innovation and most of the large companies are based out of the US or Europe, usually servicing customers within those jurisdictions who are in a different economic and geographical housing situation. Do you think we're often a little bit neglectful towards maybe the challenges of these maybe poorer nations and the environments of people who can adopt in Bitcoin, or am I being like condescending here and people are resourceful enough to figure it out themselves?
I mean, people are resourceful enough to figure it out themselves, but only with the tools that are available. And everything Nick said was correct. To custody having run an exchange and custodied a lot of money for a lot of people for 8 years, you realize that to custody properly is very complicated at the moment and very expensive. And that is out the reach of most of the people for those two reasons, whether it's a technical reason or it's a financial reason, for most of the people in the world. But also, we also know that, and actually one of the things that prompted me, other than a great selling opportunity, to sell Coinfloor was to focus myself on what I could see over the last 8 years was an ever-growing problem. And that was that more and more people are custodying on exchanges. When we launched, you have to remember, we launched in the shadow of Mount Gox. And so lots of people lost a lot of Bitcoin there, and many will never get it back. And even the ones who will hopefully get it back still haven't. And at the time, a number of exchanges promised to perform, to increase trust in exchanges by performing these provable solvency audits, proof of reserve audits. Most of them wiped their original statements saying that they would do this. We did it and continued it for eight solid years. But I actually, in retrospect, think that sort of objective of making exchanges trusted was actually, I thought it was a noble goal, and so did other exchanges, but actually, I think it's actually backfired. Okay. Because we're now in a situation where the vast majority of people, as opposed to what they were doing when we launched, which was buying Bitcoin and immediately withdrawing it to their own wallets, are now trusting exchanges and holding it there, waiting for the time when I believe, and I've seen coming up, regulation will come in place, effectively causing the music to stop in the musical chairs, making it very difficult to withdraw from exchanges. We see this in the FATF travel rule, which is not a question of where it's going to occur. It's been ratified since 2019, and this is the year where all the countries are implementing it. You've seen it with India, South Korea, and Estonia. You'll see every other country implement that. And it will make withdrawing to your own wallet or depositing from your own wallet to an exchange much more difficult, closing the door for most people on self-custody. So we need to find solutions that scale to global levels for self-custody, but provide all the benefits of an exchange.
Hold on, that's quite a big claim there, that we're closing the doors to self-custody. Do you really believe that's going to be happening?
Yes, you've seen it in South Korea, starting with Coin1, the biggest exchange in South Korea, but all the other exchanges are implementing this by March 22nd. They will start to prevent withdrawals to what they call non-KYC wallets, i.e. examples are ledger wallets and so on. And so you can withdraw to another exchange, but you can't withdraw to your own. You're seeing it in Estonia, considered one of the most forward countries in Europe. They've just put forward their proposals. Again, all of these are to implement the FATF travel rule. They put forward proposals requiring withdrawals will have to be to exchange to a location where you can provide KYC information. Now, there will be ways to do that with wallets, and I'm sure wallet developers will innovate, but they may require you adding in KYC details into your wallet, or having to cryptographically, or some combination of cryptographically signed messages. This already, people feel very uncomfortable withdrawing to wallets. If you add these extra layers, you're effectively creating a technology apartheid for the people who which makes it even harder to self-custody. So this is not, so that claim is based on well-tested and well-known information about the FATF travel rule, and we're seeing it happening at an accelerated pace.
How do you feel about this, Nick?
Yeah, so correct me if I'm wrong, but the way that I've read some of the travel rule regulations, it seems like the exchanges, they can make a choice. They can decide, okay, we're going to take the easy way and just say you can only withdraw to other exchanges that we know are regulated. Or they can go maybe a way that takes a little bit more implementation time from them, but ideally it's what their customers want, which is, okay, we're going to support withdrawing to a self-custody wallet, but we're going to have to comply with the rule, the FATF rule as implemented in our country. So maybe that means you have to whitelist a wallet address and prove, like you were saying, cryptographically that it's yours. And then it's up to wallet makers like Casa to make that really easy to do, for example, so that you still have an incentive to do that. It's definitely, but I agree with you that it's going to add friction, and that will be on people like us to build products that reduce that friction as much as possible, or else you will see in practice just more and more coins staying on exchanges forever?
Yeah, I would say we are one of so most exchanges are busy trying to just run the exchange. And so when people ask, why haven't you implemented Lightning yet, or so on, just running the exchange, which is separate to dealing with the crypto controls, as we call it, is 80-90% of your time. And a big reason for that is regulation. And over time, the regulatory burden element of running exchanges is becoming bigger and bigger and bigger. I would say it's more than 50% of running exchanges regulation right now. And in the next few years, it will be even higher. So if you have two choices and you have very short timelines to implement it, they're going to tend towards the simpler one, which is reducing as opposed to adding, at least initially. Even for the exchanges that do add that, it increases their costs. And it increases their costs for only a subset of their users. So my fear is the commercially logical thing to do is to charge pass all those costs on to the people who want that feature. So you might start seeing the cost for withdrawing going up and up and up. And then also the complexity necessarily goes up because you're having to start doing things. People are already worried about saving their seed and so on. Now they have to think about how to cryptographically sign things. So you're creating a financial and technical apartheid level. If you're not technically au fait enough, or you don't have enough capital, you're just locked into holding your money on exchange.
It does feel like we're in a place where we are eroding away at the things about Bitcoin that we like, and the things about Bitcoin that were designed to get us away from this current system. But the current system is like clawing its way back in and trying to make Bitcoin become part of that. Do you think we're putting up a big enough fight? How about you, Nick?
Yeah, I mean, I think there's got to be a push from the industry and the people who understand why this is so important to be working with regulators, to be educating our governments, and to be educating even people, just users of Bitcoin, as to why it's important to self-custody and why taking control of your Bitcoin is so important. And there's very practical reasons for this, right? For a lot of people, it is philosophical, not your keys, not your coins is more of a philosophical saying these days for some people, whereas maybe in the Mt. Gox era, it was very practically real. But there's a whole practical side to this where that I think a lot of people don't take into account. And that's, for example, the ability to have your exchange account get hacked. And since you aren't holding the keys, all somebody needs is your username and password. They log in and they can move your funds elsewhere. Well, that's something that causes people real pain. And the way to solve that pain and people losing money is to self-custody and to hold your own keys. And so by bringing some of these things to the forefront and actually having real everyday users, pushing this at the local, state, federal government levels within their country, I think that can help a lot. It can go a long way. Even over the last year within the US, you can see a pretty significant change in tone from Congress members who initially either didn't care about Bitcoin or were actively working against it. Well, there's many of them. And Peter, you've even had at least one or two on your show who have realized that this is a huge contingent of people. And they have wealth. And so it's actually very beneficial to work with the Bitcoin / broader crypto community to be pushing friendly regulation. And that works out for them as a candidate. So I think you'll start to see some countries kind of set themselves apart here. Some are going to take a more restrictive regulatory approach with how they implement the FATF guidance, which can, as far as I know, be implemented slightly differently from country to country. And then I think some countries are going to be more friendly to Bitcoin than others, which is going to make a huge impact as Bitcoin becomes a new sovereign world currency.
To the question of are we fighting hard enough, I think organizations like Casa are part of the people fighting, whether it's fighting through creating incredible technology or if it's fighting through their attempts to lobby government. However, what I would say is, having run an exchange for 8 years, we spent a lot of time talking to government. I gave evidence in front of the Treasury Select Committee on crypto assets. I've talked to the Bank of England, every security force in the UK, and the police, and so on. And what I came to, the conclusion I came to over the years was that ultimately they realize that fundamentally Bitcoin is designed to work best when it's identity less, and it's about allowing people to have maximal freedom on the movement and holding of their money, when at the same time a regulator's effective role and desire and objective is to restrict the movement of money. And these are fundamentally opposing views. And it takes different people different amounts of time to realize that, but they do all, from my observation over the years, all eventually realize it. And so that was, I said, one of the reasons why I decided to, 8 years was a good enough time. I did very well. And I wanted to now dedicate myself to focusing on advocating Bitcoin in areas where I felt there was need. And I felt there's a need in improving the Bitcoin development ecosystem, because there's only a very few people who are securing this code base, and anything we can do to increase that number is a good thing. And the other area is custody. Solutions that, and having analyzed the market and having spent years begging people to take their money off our exchange, which is not something other exchange operators are incentivized to do. And people telling me to their face saying, thank you, we completely understand, but we're still holding with you because I trust you more than myself, and various other reasons. And what happens if I die? And what happens if I forget my password? And there's all these different issues. I realized that we have to think about ways of solving this, and not just for the West, but for the rest, because Bitcoin is going to be most impactful to the rest of the world, ultimately. And if it's impactful to the rest of the world, that benefits the world, because we cannot believe that all the Einsteins in the world are just in Western Europe and America, and all the Peter Willers are just in Western Europe and North America. They're not. We just haven't discovered them. So if we discover those, that benefits everybody in Bitcoin. And so we need to make this happen.
How does B-Trust play into this? Because I know your role there is very new, and it's a very new organization, and I haven't seen a ton of info out about what you guys are planning to do there. Like, I'd be really interested in hearing how that falls into this new mission that you have personally post Coinfloor.
So it doesn't fall into the custody side, but it falls into, if we look at the cohorts in the, for me, every board member has a different view, and we just launched just before Christmas, which is great timing, because then you have Christmas break. But so there's still a lot to be defined. So I don't want to talk too much about it because I'm only one of a group. But fundamentally, from my point of view, if you look at the cohorts that make up the Bitcoin ecosystem, you've got miners, you've got custodial wallet or non-custodial custodial wallet producers, you've got node operators, et cetera, et cetera. You've got the actual holders of Bitcoin themselves. The Bitcoin developer ecosystem is actually a relatively small one. There are a few hundred people who are regularly contributing to Bitcoin. And out of those, there's probably a few dozen who have the ability to review and modify, review changes to Bitcoin, and ultimately their approval, you'll need to see their approval before those go in. We also saw last year 3 quite significant Bitcoin developers decided to publicly step back from developing in Bitcoin. And so I feel for a healthy, strong and decentralized Bitcoin ecosystem, you need strong and decentralized, all of these elements have to be strong and decentralized. And so with B-Trust, what we are looking to try and do is help decentralize and strengthen the Bitcoin development ecosystem. So we want to effectively incubate Bitcoin developers, Lightning developers, and people who can come out of this process and potentially contribute to things like Bitcoin Core to the level that we see Peter Willer, Andrea Postra, etc. contribute, or to Lightning like Roast Beef and the guys that contribute, but also to all of the other Bitcoin related projects, for example, Casa, or whether they be open or closed source. And we just create this sort of process of rolling out and providing Bitcoin, strong Bitcoin development talent. The other benefit these guys will have is because we focus on the global south, as I like to put it, these are parts of the world where they have a first-hand understanding of the need for the currency. And so if they have the technical capability and the philosophical capability, but they also have the agency of seeing why it's going to help them, that can help when you're in a conversation, you know firsthand how it could be of interest. If you're looking, for example, to explore expanding your offering so it works in a global context. Imagine you have someone on your team who's as technically strong as Lop, but was also living in one of the countries that you're looking to expand to.
Yeah, totally.
And finally, in terms of capital, compared to every other sector, if I wanted to potentially increase by 10% the Bitcoin mining power, I'd need tens of billions. If I wanted to increase the exchange, Bitcoin exchange space trading volumes, again, I'll need billions. But we'll need probably to add to Bitcoin Core by 10%, we'll need 5 of the top developers. We need to incubate 5-6 people. So doing that in the global south actually is a very, very efficient way of helping the Bitcoin ecosystem with not so much money.
Nick, we've Bitcoin just had another birthday, 1013, which for anyone who's a parent, that brings in a new era of parenting. It brings in an era of teenage petulance and people who think they've grown up and they haven't yet. But when we think of Bitcoin, we're now 13 years in. Obviously, it's had a very rapid rise. Where do you think we are in that kind of like life cycle for Bitcoin? What do you think are the most important things that, I mean, Obi's been talking very much about the decentralized nature of developers and growing that. And that's a very important cause because it is very much centralized around certain regions in the world. So that is great. But what else should we be working on? What else should we be thinking about here?
Yeah, so to me, it seems like we're in the, if you think about the adoption life cycle of a product, you've got kind of the innovators, the early adopters, early majority, late majority, and then laggards. And it really feels like we are towards the end of that early adopter phase of this. A significant amount of people around the world know about Bitcoin. And so they know what it is, whether they know the right things, whether they've been educated correctly or just think it's a scam, maybe that's up for debate still, but they've heard of Bitcoin. And a lot of them haven't necessarily used it though. And that it feels like, especially with some of the things that Obi is talking about and what we've seen over the last year, we're starting to creep into that phase where we're hitting the early majority. We're seeing people who, even just looking at the US specifically, where a lot of Casa's businesses today, your typical kind of later adopters are the not as technically savvy people. And so we're seeing those coming to Casa over the last year and moving off of Coinbase or Kraken or whatever other exchange to hold their own keys for the first time. And that's because at Casa, we've put a bunch of work into making that really simple and putting in place all the security building blocks you need in order to do that safely. So what I think that we really need to be focused on here, though, is really along similar lines to what Obi's been saying. And it's about continuing to give access to Bitcoin in a permissionless way. Because what struck me earlier as really interesting was Obi was saying that the real catalyst for adoption in Nigeria was when they banned Bitcoin and they said, or they shut down bank accounts. And then they said, they were pushing against Bitcoin, and that actually helped it grow. And so that's really driven by that censorship resistance narrative, where it's your Bitcoin if you hold the keys. It's seizure resistant. And that's something that if you look at the West and you look at the US, UK maybe as well, some of the other, countries that have a more robust financial system, the narrative that drives most of the adoption here is more of that inflation resistance narrative. People are worried about inflation. They like the 21 million cap, all of that. And so it's interesting that there's these two sides to Bitcoin, right? There's that inflation resistance, and then there's that censorship resistance. And each of them has a part to play in global adoption. And the inflation resistance side, is one that I think people are going to get that, whether they're holding their Bitcoin on an exchange or whether they're holding that in a wallet. What they are not going to get is that censorship resistance side, that permissionless nature of Bitcoin. And I think it's super important that we as a community are really pushing on that permissionless side and trying to make that as simple and open for people to access as possible, because it is a core reason for Bitcoin. It was the first sentence of the white paper talks about that being important, a permissionless peer-to-peer cash system, right? So I think that is an area that is really important for us as a community to be educating and pushing and building around more over the next few years.
Yeah, Nick perfectly said it. We're at the early majority phase. More so, I say, in certain parts of the global south, in fact, but everywhere. And if you're in a country where they have high rates of inflation, where they want to control their money, but they're not able to control it to the level that they can in the West, the permissionless aspect it's obvious that that's a really important part as well. And the reality is right now, there aren't solutions that work at scale when in certain parts of the world. If you want to spend $200 or $100 on a hardware wallet, well, first of all, you have to get it shipped to you, because you'll probably arrive and there'll just be like screws in a box, not the actual hardware wallet. And second of all, and then you have to worry about the supply chain reliability, because you can't really rely on that.
And just getting it through customs,
You'll have to receive it. You don't have that sort of ease of transport. Once you receive it, then for many people, that amount of money would be better spent on buying more Bitcoin. It's only when it's a small percentage of your earnings does it make sense to do it. So there are projects, and I'm involved with a few open source projects which are trying to provide solutions that if Casa can give, say, 20-30% of the world, we want to figure out how we can get it to, and Casa, the more people the merrier, the other 60-70% access to levels of custody that organizations that Casa puts into place. This is what I'm interested and excited about doing.
Do we have any blind spots with regards to this? Because as Bitcoiners, we're all very bullish. We always have a good reason argument for every criticism that comes at Bitcoin. But especially, I see this, Obi, as somebody who's a bit more traveled. Like when I travel around a Bitcoin and speak to people, I feel like we do have some kind of like blind spots as people maybe in the West, in kind of wealthier countries, really not thinking through the scenarios or the use cases that exist for people across much of the world. Do you believe we've got any significant blind spots?
I think Nick just spoke about one of the biggest blind spots for people in the West, which is the West is obviously the wealthiest and one of the most successful parts of the world. It's got there historically for two reasons. Its ability to weld force efficiently, but even that has a deeper underpinning, which is that it has institutions, whether it's military institutions, financial institutions, governmental, legal, that operate correctly, consistently, and can be relied upon and trusted. And if you have those, you can do things like win wars. Sun Tzu, Art of War. You have an efficient army, you can win wars, but you can also win financial battles. You can weld control over other parts of the world and effectively attain and retain wealth and power. And this has served the West incredibly well, and to the point where everybody in the West takes it for granted that we can rely on our institutions and so on. If you now go to the global South, it's the opposite story. It's a story of whenever you relied on any institution, whether it be a bank or the police in the form of SARS, for example, the special anti-robbery squads, or banks, which regularly, as I was growing up, were going bankrupt. It was very common for banks to go bankrupt in places like Nigeria. So you learn to not trust institutions, because trusting institutions is a net negative for you and your country and your experience. And of course, there's exceptions to the rule in both sides. Now along comes Bitcoin, and what I see here is a technology which is completely meritocratic, and also it rewards a don't trust but verify mindset, a mindset of not trusting institutions and working to make the technology more and more censorship resistant. So what has helped and has served well the West for so many years, ironically, is the thing that makes the West have most difficulty seeing what could be a big impending existential risk, which is prohibition that is sort of dressed up as regulation that just gets ever more strong over time. Now, this may not happen. But I just logically, there are two reasons why I think that it doesn't make sense to assume it won't happen. One is, if you just look at it from a risk point of view, the downside risk of assuming that regulation will happen and you being wrong is much higher than a downside risk of assuming that regulation, reasonable regulation will happen and you being wrong, is much higher than the downside risk of assuming that onerous regulation will happen and you being wrong. So it makes sense from a risk management point of view. The worst case is you miss some opportunities and so on, but you're still going to do fine. Whereas the other, you could lose everything. The other reason is that it's just human nature. Asking a regulator who gains their power from regulating and restriction to permit something that is all about lack of control by a third party doesn't seem to make sense to me. From my point of view, I don't believe turkeys vote for Christmas.
All right. Well, listen. Look, we could have gone on for ages. I've barely got through any of the questions. But we do have some Q&A to get through, so we'll try some of this. If we run out, I'll go back to the other questions. But there's some good questions here to already kick us off. I think you both will have an answer to this one, but I'll start with you, Nick, first. What are the best custody solutions for people in countries like Nigeria? It seems like exchanges, mobile wallets are the norm. However, security could be an issue long term. I know Obi will have an answer to this, but is there anything that you're aware of yet, Nick, or should we just pass it to Obi?
Yeah, so mostly just pass it to Obi because I think he's got a lot more experience here. But to me, logically, everybody's got a mobile phone, so I think that's going to be the first place where this starts. But I think Obi's going to be able to answer this question a lot better than me.
The reality is right now, most people still use exchanges. They use things like Binance, for example, yeah, or certain peer-to-peer exchanges, BitNob, Paxful, etc. And as I say, our assumption is that there is a risk that won't be able to continue through regulation. But for right now, those are better solutions than the others, which are either too expensive or have supply chain risks or so on and so forth. Down the line, there is work on projects which provide many of the benefits of an exchange, but without storing on exchange and use some form of collaborative custody, multi-signature custody. So Casa is just stated, Nick's just stated that you're going to be looking more at this, and that's great. I'm involved with a project called Fedimint, which is, again, very early. It's not at the stage where you can store real Bitcoin with it, but it's an open source project to provide another form of collaborative custody. It's taken inspiration from what was happening by Galoy in Bitcoin Beach in El Salvador, which is another reason why I was there. I wanted to see how that's operating. Bitcoin Beach, Galoy's product that they roll out to Bitcoin Beach is another product that they're looking to. Again, it's collaborating. It's getting a group of a village or small groups that have existing second party trust relationships to effectively have each other's back. So instead of I try to find some of my friends to be my backup for my key, why don't lots of people club together, which is it's a concept that's much more normal for people with modest financial means clubbing together in places like Africa and Latin America. That idea is very common. Why don't we club together with some technology to help us automate stuff that we already naturally do, and we have each other's back, as it were. We back up each other. We can then amortize costs like on-chain costs across everybody, because we're effectively, instead of one person having multiple wallets, like is common in the West, in these sort of setups, you effectively have one wallet owned by multiple people.
It's kind of like almost creating a new community bank or something like that.
Exactly, and you're using technology. These things happen already. You see these networks where, for example, savings networks where people put away a certain amount of money, and at the end of each month, it's grouped up and given to one person. We see these things happening naturally. So technologies are starting to come into place that effectively automate and turbocharge these existing trust models, which are separate from you doing it all yourself, first-party custody, or you giving it to someone you don't know, third-party custody. This sort of collaborative second-party custody, i.e. people that you already know for a long period of time. You have strong trust with them. Your children, your parents, your best friends. It's not know your customer, it's know your friend, know your family sort of thing.
Do we know how much of inroads that the digital yuan is making within Africa right now? I think there's some very there's some concerns with like the growth of CBDCs and how they will be used by China to essentially Trojan horse debt into countries within Africa. We've already seen that with some of their investments. Do we know if there's much inroads being made?
I mean, I don't have good insight on the digital yuan in Nigeria. All the conversations I have, just a few days ago, I was talking to the CEO of a large Bitcoin broker, and it's people are only interested in Bitcoin. I mean, they're interested in altcoins as well, and they're interested in stable coins, but stable USD stable coins. Yeah. These are the ones that they talk about. So the fact that I haven't had anyone mention, I'm just picking up a bit of digital on, suggests that it's not getting into the sort of vox pop.
It is interesting though. This maybe not the digital yuan specifically, but this idea of CBDCs and stable coins seems like going back to one of those earlier questions you asked, Peter, like one blind spot potentially, because I think recently I listened to a show that you did with Alex Gladstein, and he was talking about, I think it was Lebanon, and how he was hearing a lot more about people using Tether than people using Bitcoin. And it's interesting that they want access to dollars, and Tether and other stable coins give them that where they couldn't access it before. And so there is maybe somewhat of a risk that if the US really decides to lean into this with a more open CBDC, that becomes a threat to a global adoption of Bitcoin, because people just say, well, I want access to the dollar because that's what I know, and it's easier for me to access it through something like a stable coin or a CBDC. So I think that's a pretty interesting and potentially risky trend for us to be watching globally.
Although I think it does come back to governments getting involved, putting in place stronger regulation ultimately is the best educator for Bitcoin. Right. So if you look at, so FATF is effectively this unelected body who provides advice on regulation related to AML and countering terrorist financing and proliferation financing. But they have an almost 100% record of countries implementing worldwide whatever they recommend. On the other side, you have the Bank of International Settlements, which by their own websites define themselves as the bank for all the world's central banks. And so it's the World Bank and not the ostensibly charity giving World Bank, which actually is just a mechanism to impoverish poorer countries. But it's a bank for world banks, for the central banks. And if you look at their latest proclamations on cryptocurrencies, Bitcoin, they think Bitcoin is terrible and it's an energy use. They show all the FUD related to Bitcoin, and their view on most cryptocurrencies is not very useful. But their strong view is that stable coins are a big threat, and all the central banks in the world need to implement central bank digital currencies. And their view is that all of these, they recommend that all these central bank digital currencies should implement strong levels of KYC on all users. All transactions should be KYC'd. They recognize that many people won't like that. They've stated that, but they still nonetheless believe that should be recommended. So that again has now got to the point of recommendation, and banks take longer to, and it's much newer than the FATF travel rule, which was 2019. But once it starts down that road, it will happen. And so my view is when a central bank digital currency comes out like that, especially if it's going to be 2 or 3 years away based on the speed that they move, it's going to highlight more than anything else why something like Bitcoin is needed. So it's going to be the best advert possible. So I think we should do everything possible to accelerate that process, because it will just accelerate adoption of Bitcoin. Nick,
do you worry about the government or any governments putting any undue pressure on Casa? You may have had it happen already. I know there are requests that have gone into. I'm sure Jesse Powell from Kraken has reported on this, and Eric Voorhees from Shapeshift have reported on the amount of requests that come into them. But do you ever worry about this undue pressure that will come onto Casa? And is that something that you guys are thinking about?
Yeah, I think it's definitely something that we think about a lot. And we've really tried to build Casa's product and business in a way that even if we receive that inbound pressure from governments, which as we get bigger, I'm fully expecting. Coinbase actually, I think, releases a yearly report, which talks about how many requests from the government they've received, and it's insane. So we've really tried to build Casa in a way that protects our users' privacy by default. So, since it's self-custody, we don't have to KYC. Since it's, people can sign up with a completely pseudonymous email address. Since it's their own keys, the government can never really say, Casa, you need to freeze this person's account, because the person can just go and set up their keys in Spectre or something else and still have access to their Bitcoin. So we've really tried to build the business in a way that protects against any of this onerous regulation, because we believe at its base, Bitcoin is all about that permissionless, privacy preserving angle. And that's important to stay true to.
Yeah.
All right. We've got 4 or 5 minutes left. I'm going to throw a final question out to both of you. It's kind of like a double question. We'll go with you first, Obi, and great to share a panel with you, mate. So what are you most looking forward to this year, and what do you think would you encourage people to be focusing on?
So I think I've already said that I feel incredibly blessed to be able to no longer have to work for a regulated exchange, and be able to, although it was very beneficial for me, I'm excited to work on all of these open source or not-for-profit initiatives to expand the reach and the benefit of Bitcoin. And so whether it be Trust and helping in whatever way I can to strengthen and decentralize the Bitcoin development ecosystem, or whether it be projects like Fedimint and or whenever Casa comes out with anything they would work on, I'll be singing it, I'll be talking about it wherever I can, because I think collaborative custody is probably, with probably things like multi-signature at heart, is probably the way to go. That is the balance, the best of both worlds, the convenience of exchange, but with the sovereign custody elements of storing your own key. And so I'm excited about pushing both of those things, and I'm just really looking forward to 2022.
How about you, Nick?
Yeah, so I think as far as it's hard to predict what kind of specific event will be, the best thing for Bitcoin in the next year, but I think there's a lot of growing development work in areas like Lightning and some of the other like Bitcoin adjacent, whether it's side chains or layer twos or whatever, that I think is going to be really exciting to continue to watch. And I hope that, especially with Lightning, I hope that adoption globally continues this year that we've seen over the last year. As far as what really makes me just excited and that I'm focused on generally for Bitcoin as a whole, is this idea that, like we've been talking about through this whole time, that Bitcoin is this permissionless financial ecosystem, especially when you are holding your own keys. And if you really think about that, the West has had institutions that we can rely on, pretty well to do what they say they are going to do in the banking industry. You generally in the US don't have to worry about your bank account disappearing. That's not really the case everywhere around the world, like we were saying earlier. And Bitcoin comes in and provides this open, completely permissionless financial system for the entire world. And so people who have never really had stable ground on which to store their money and to use as a base for everything else that they want to invest in and build in their life, suddenly are getting access to this through Bitcoin. And I just have to think that there's going to be so much value created by bringing in more and more of these people to this single digital open permissionless network. And so seeing that happen is just something that I'm really excited about and looking forward to. And I really like what people like Obi are doing with Trust, et cetera, to help further this around the world, because it feels like it's going to be a massive technological change in the world. And a lot of people like to think about, what happens when you have sound money, which only has a 21 million Bitcoin supply, right? Well, also the flip side is, what happens when everyone around the world has access to a stable financial system that they can trust in the form of Bitcoin? There's just so much innovation that can happen on top of that from a technical and from an access perspective. And so that's what I'm excited about.
Amazing. Well, listen, guys, it was a great panel. Obi, is there anywhere you want to send people to like find out this stuff you're working on? Like if people want to support you or help you, we're trying to recruit developers around the world.
So,
anywhere.
So for Trust, we've set up a Twitter which is @BTrustTeam, and follow that. When we start to make announcements about it, that'd be the best place to follow. For me and my musings, it's best to just see me on Twitter. I'm @Obi on Twitter, OBI, just my first name. I'm an old guy, so I got in very early to Twitter.
That's pretty impressive.
That is pretty impressive. Nick, I'm pretty sure everyone knows where to find Casa because this is your session. But thank you for having me, inviting me to run this panel. Thank you to everyone who joined us. Some great comments, great questions. I think I only saw one very inappropriate one from some idiot, but apart from that, it was really good. Appreciate your time. By the way, I tested positive with COVID and I feel terrible. So I just managed to survive through this. That's why I've been drinking water all the way through.
appreciate you sticking it out and still coming to run the session, Peter. And so thank you very much.
Oh,
always got you, man. All right, peace out, guys. Good to see everyone.
Guys.
Take care. Later.
Bye.